crypto trading is like I am a flea market or a pawn shop owner, and being the person behind the desk makes the money. I enter this huge flea market where many thousands and thousands of people are looking to buy under only 100 things. And it's like I am a merchant who tells my employees to buy and sell at certain prices. They do so, they execute it, only a 0.15% fee. And this fits in line with everything I learned in high school business classes about markup, making money, all this kind of deal. If I buy a 20 and I sell at 21, well, that is profit. In this case, it'd be 5%. I paid my people 0.3% for a positive 4.7% income. That's how the game works. Sell something else at 100 and buy it back at 95. How can I lose? It's like if you are selling hockey cards behind the flea market. Oh, you have that? Yeah, I'll buy it off you for, I'll give you $80 for it. Oh, you want to buy that off me? I got it for 100. Well, the book says it's for 90. Hey, that's how I play. And that's exactly how I look at this. Now, as far as strategies are concerned, I'm going to be talking about bull, bear, neutral market, where to buy and sell and accumulate in each in a little bit. As far as intermediate term plays, accumulation, day trading, distribution, back to day trading, go over that as well. Now, key Fibonacci levels, if you're looking to buy and sell and figure out where, one of the ones that I look at is Fib, where if I'm at an area I know it's probably going to stop going up, well, that's an area I want to sell more aggressively. In areas where I think it's just going to keep riding higher, yeah, maybe not sell there or sell less in volume. And same thing on the way down. If there's a spot where it should stop going lower, that's the area you want to aggressively buy more. And the areas where it should keep going lower, you don't buy, or you buy in less volume. Also, market orders. Let's assume you wanted to buy within this. Where would you buy? Well, you could jump to the top of the line and go 50, 80, 88. But that to me is a bad decision, because you got some big orders in a 50, 47, 45, and 44. Someone can come in and scoop up a little under 30,000 shares and they're ready to go. But that means for them that they could sell it for better price than, say, well, if you're selling a bunch, maybe getting an average of, say, 50, 87 down to 50, you're getting an average of, I don't know, a lower number. But they can get rid of a lot more, so I can put a number in at 50.48. That's where you would put a buy order. Other places, you got a big number in here at 5,000 with 12,000. Why not put one at 5,001? So just different things to look at. Where are you more likely to buy and sell quicker? How can you get a little bit more of a percentage gain on your plays? As far as money management is concerned, the easiest way to get rich fast is to bet it large. It's also the easiest way to destroy your bankroll as well. At what level can I make a very smart aggressive play? Is my bets too high, or in some cases even too low? Having smart bankroll management is very key. What is a good average percent to maintain on a daily basis? We'll get that in a little while. Can you handle losing weeks and days and stay focused when large gains appear? Because there might be times where you might gain, like, say, 20 units in a week and then give back 5 of them or 6 of them in the next 7 days. Can you handle that? Also, situations where you gain so much, is it going to lose focus where you're going to make mistakes? And the more mistakes you make, that means the more you're going to take away from your profits. It's all about minimizing your mistakes to as close to nil as possible. How do I profit from an uprising account balance without hurting my ever-growing bankroll? Because if you're trying to consistently gain about 1% a day, and you take something out to profit take, which I think is a smart idea, that means you have less of an equity to work with, so be it. fact, it's easy to do after you have big gains, because if, say, for example, you have large gains where it's like, oh my goodness, I just got stock went a lot higher than I thought, I can easily make this withdrawal without hurting my bankroll, then do it. Different strategies like that is what you're looking for. Of course, you're going to get to the point where if you need income and you have to withdraw, you have to do it. But the key is to ensure that it's like a compounded interest situation. When you look at this as far as gains per day, on the traditional banking level, as if you're going to get 148% in a year, but I have this on the lowest level of percentage gains per day for a year. And I got 365 days because, well, these markets never close. And even when you're on vacation, you can still bring a computer with you and check your hotel room in the morning and when you go to bed, and maybe not get as many aggressive day trades in, but you can at least still fill your orders. Oh, I sold this, let's buy it back, sold this, buy it back, bought this, let's sell. Okay, take a half hour of time and your day is done for doing this work when you're on vacation. But with that being stated, you can make these really large gains if you can maintain what I would consider to be maintainable daily percentages. You can have days where you can gain 7, 8, 9, 10%. And you can get a bunch of those to really help you to maintain a 1.5% average. As with stocks, you see stocks go way up and then they have to have retracement, because, oh, what happens here is you get a whole bunch of people that bought down here, like me, that are going to profit take, and then that's just going to make the markets go lower. But when you're talking about your balance and you manage to be in a situation where you distributed most of your stuff, or you at least make it so you could handle the loss with your strategy, that means you don't get a big retracement. Instead of the main market going like this, your market goes like something like that, just sideways when this goes down large, because you're controlling your own bankroll. It's all about you and your decisions only within it. Now, as far as if you know a stock is, say, or a chart's going to go way up, let's just use this as an example. And you know this is so cheap. So in these stages here, you just buy a lot of shares, and you may not even want to sell any, or maybe you barely want to sell some. So maybe you buy 1,000 shares, but you want to day trade still, so you're going to sell a couple hundred or 300 here and there. Or you're also maybe going to do strategies where I'm going to buy 50 shares, but when I sell them, I only want to sell about 40 back, or 35, or something lower. So the more buys and sells that I get, the more shares I'm going to accumulate. But then when the market gets higher, you're going to be getting to the point where, okay, it could correct, and it's only got so much upside room left. So now I'm just going to buy and sell for equal share sizes. So maybe I got 2,000 shares. I want to keep it at such. I'm going to buy 50, sell 50, buy 50, sell 50. And then you get to the areas where it's like, okay, now this thing is probably going to sell off soon. It's coming to a major key fib point. We'll say the fib point is right here. Then all of a sudden, when you sell, you don't put a buy order in. Or you sell, instead of buying 50, selling 50, you buy 50, you sell 150 or 125. You do whatever you can to eliminate it. And then maybe to play the game, you buy some small amounts here, and you're going to find an area where you're going to buy back in again. But the whole key point is, when this thing is going down, because if you were right about calling this as a top, that means you only have so many shares you're holding, and you've already got a bunch of cash on your bank or in other funds you've already re-put that into, to make it so that when this chart does this, your chart does something like that instead. Much different, and really that's what the whole plan is to do, is to make it so that you can maximize the gains. And when you see markets are going sideways, it becomes very easy to determine where the better places to buy and sell are. And if you're playing the markets all the time, because when you get in this upward markets that you notice and you start to see that your higher highs aren't coming in and you're buying at what levels doesn't turn into the low, oh, it comes down here, then you start to say to yourself, yep, she's looking neutral, and you just buy at the lower end, you sell at the upper end, and it's either going to break the range to the upside, and if you're long on something, well, so be it, that's what you want. And if it breaks it to the downside, if you don't mind accumulating more, well, then just start playing it on that level. So anyway, thank you for tuning in. Best of luck with your trades, and take care.